Wow, what Waller from the Federal Reserve just said is, well, somewhat really unexpected and surprising on inflation, but frankly, expected on what they were trying to accomplish with rates. Remember, when Powell reduced rates 50, we expected Powell would want to see some loosening of financial conditions, lowering of rates, but yields on basically the entire curve, both the 2-year, the 10-year, or even out to the 2030s, they went up. So my expectation was the Fed was going to talk those down somehow. What I was not expecting was what Waller just mathed out on inflation. Waller just told us, hey, markets were so focused on expectations and whether we beat or missed on CPI or PPI, but what they didn't do was calculate out what PCE inflation is running at on an annualized basis. So in other words, what is the estimate for August PCE, which we don't get until the end of this month? What is the estimate for August PCE based on that CPI, PPI reading? And what does that change month over month, multiplied by 12, and what's basically the speed we're driving at in inflation? And what he said was shocking. He said the annualized rate of inflation right now on PCE is likely under 1.8% on the headline and likely under 1% at core, and that is with hot housing inflation. Now remember, when CPI and PPI came out, I said, wow, okay, the areas that popped were lodging and air travel. Okay, so we saw a pop there. And then what we also saw is that owner's equivalent rents are obviously still substantially higher than current market rents, which when we look at current market rents, they're mostly flat. Some areas you've actually just got straight up declines. So as long as that holds, we know owner's equivalent rents will keep coming down, which given that that's 25% of PCE, 34% of CPI, a huge component of inflation is housing. That's one of the remaining hot sectors, which is basically plummeting. And even with that hot data, you're running at 1.8% inflation annualized, monthly pace annualized times 12. And you don't use exponents, you multiply by 12. And core less than 1%. This is really consistent with what we've been talking about, not just on the channel, but when we analyze company earnings. Every company that we see is talking about how do we provide more value to our customers. They're not talking about price increases anymore. They're talking about how do we advertise this new value. The restaurant industry is freaking out because traffic to restaurants is in the toilet. Some of the performance indices for restaurants are at recessionary levels we haven't seen since 2008 and 2001 or even COVID, which is weird. And what that means for a recession. Some people say it's an indicator. Some people say it's a restaurant industry problem. People are fed up with the high inflation. It's also possible people are just running out of money. They had a lot of money, a big net worth boost from COVID, and now that's sort of waning out. But anyway, this is really, really actually good news on inflation because it is consistent with not seeing a second wave of inflation. Of course, it's always possible that more money printing after they create a recession could create a second wave. I don't think so. You know that about me, but I want to acknowledge that possibility. But at least what we're seeing from companies is exceptionally low inflation. And it reiterates what Waller is saying here. And now what you're seeing is yields are coming down because he's suggesting, look, if inflation keeps falling like this, we can drop rates even faster than we had been expecting to. Obviously, if there's a resurgence, we can even pause. But the data we're estimating now is that it's plummeting, which is actually fantastic news. It's good news because it is a way of finally explaining a little bit of why did Powell go 50? Oh, maybe Powell's being honest and he doesn't see as much economic weakness and they're just moving faster on 50 because inflation is falling faster. A lot of people think, though, behind the scenes, it might also be trying to cover up some real underlying fears that they have about the actual strength of the economy. Because frankly, if Waller came up today and said, yeah, we went 50 because, inflation's falling faster than we expected, but also things are going to SH9T, well, then you would just induce a recession because by them admitting that there are fundamental problems, you would just exacerbate those problems as people flee to safety, stock market falls, and then you get layoffs and you get all the drama that comes with that. So anyway, bottom line out of all of this is actually a fantastic first Fed speak next Fed Speak, we've got a really busy Fed Speak. Waller's the only one today. Really busy Fed Speak day on Monday. And then next Thursday, we'll actually get Powell, as well as multiple other speakers like Kashkari, who's deemed to be one of your biggest hawks, but he voted for a 50. So it's going to be really interesting. I personally think over this next week, you're going to see yields plummet. But that's my take. We'll see. No guarantees. Anyway, thanks for watching. We'll see you in the next one. Goodbye. Goodbye. I said that twice. Goodbye. Good luck. And I love you. Bye.